Hello, everyone. Good afternoon. How are we doing? Can I get a mic check real quick before we keep going? All good. Awesome. What's going on, Christopher? How you doing? Popcorn locked and loaded. Awesome. Happy to have you, Christopher. David, what's going on, brother? Glad to have you. Jack, appreciate you tuning in. KK, what's going on, my man? Good to see you. All right, awesome. Let's go ahead and get right into it. So let's go up to a monthly chart for the dollar index. Well, actually, before we get into the technicals, let's go ahead and cover the economic calendar. So the previous week, as we've discussed, pretty much forecasted a consolidation given that relatively little news drivers, as we've only had two high impact for US dollar. That's particularly what I'm focused on. And we pretty much forecasted a range bound week, and that's pretty much what we saw on the dollar index and indexes. So going into this week, as we know, small ranges are followed by large ranges, and then we also have the economic calendar to confirm that. So we have CPI on Tuesday, FOMC on Wednesday, and red high impact news drivers every single day this week. So something to be mindful of. Expect a lot of animation, and keep in mind the economic calendar, CPI, FOMC, and understand that those news drivers, what they do and how to trade them. I've already covered the protocol that I employ for those specific news drivers, so you guys can refer to that, but just some things to be mindful of before we get into the charts. So nothing much here on a monthly. Let's drop down into the weekly now. And since we have quite a few new subscribers, as most of you guys know, we'll take questions after the first around 30-35 minutes, where I'll do the intermarket analysis, go through the dollar, bonds, indexes, and some Forex, and then I'll take some questions, some specifics of whether it's trading related, looking at your specific market, whatever. It's fair game. So with that being said, for all the new people here that are joining us, glad to have you, and let's go ahead and get right into it. So looking at dollar index on the weekly chart, last thing I left you guys off with on Sunday was we have been bullish, and we've traded up to a premium of this dealing range from high to low. And then we've finally reached premium valuation. We traded up to our upside objectives being, this is a daily level. Let me take that off. Weeks. Okay. Being the mean threshold of this weekly order block, the middle of this up close candle, we delivered that beautifully. And then what I wanted to see is how we trade inside of these premium levels to indicate, are we going to continue higher or see a reversal? So looking at price action from this past week, we see we were unable to mount a rally through this mean threshold. Another thing that's significant here that also confirmed a bearish bias in dollar index is how we failed to trade to consequent encroachment of this wick. So measuring that real quick, 104.463, which would be right about here. And we see this candle's wick was unable to trade up to that 50%, indicating the market is weak. So I will be expecting lower prices. We traded back down into this inversion fair value gap on the weekly that we've been watching for some time now. We used it as support into our premium objectives. But now if we are to remain bearish and continue lower from the bearish order flow we're seeing on a weekly, price should trade down through this weekly inversion fair value gap. If we're unable to do that, then I will just reassess and determine if we are going to continue higher. However, I am favoring lower prices. As I've said, the mean threshold, unable to trade up to consequent encroachment of this wick, and the fact that we see a market structure shift on the daily confirmed by bonds, which I'll get into further. So drawing liquidity for the dollar index on a weekly will be this weekly fair value gap here below market price. As I said, assuming we trade below this weekly inversion fair value gap. One more thing I did want to cover here is looking at this fair value gap in particular. So note how we used it as support, and then we've now traded down below it, closing below that key level. So this is another confirmation indicating bearishness. So essentially what we're doing here is we're looking at the algorithmic signatures, the PD arrays as ICT is taught, and we're using them and seeing how the algorithm is relating to these specific PD arrays so that we can gauge and measure order flow. So simply put, that's all we're doing here. So now dropping down into a daily chart. Let me clean up the weekly levels. All right. All right, awesome. So traded up to a premium, we have this daily bearish order block that we've had our attention on, as well as a premium objective. So if we were accumulating longs down here, which we were bullish here all the way up to these higher prices, these would definitely be valid take profit levels, as up close candle before the down move would be our bearish order block. So this is where smart money selling would occur in a premium. So one thing I did want to note is look at how price is reacting specifically at this opening price. We see the bodies unable to trade above it. Remember, wicks do the damage. They can color outside the lines. And then we see here on Wednesday of this previous week, we traded right up to that opening price and rejected it hard. So these are all things that are indicating bearish order flow to me. So I will now expect price to deliver lower. Another thing here is we have this fair value gap, which became a balanced price range once we've offered sell side, buy side, and then we left it. So now we see the same levels acting as resistance. The bodies are unable to trade above it, indicating that the market is bearish. So then we displace lower, trading through this swing low. So I'm interpreting this as a market structure shift, leaving a fair value gap. So what I would be interested to see going into this coming week is price potentially trading up into this daily fair value gap and rejecting lower into the discount levels that I will highlight in a moment. And then, as I said, this weekly inversion fair value gap, it was support here once more. So if we are to turn bearish and attack discount and these relative equal lows here on a daily, we should trade through this weekly inversion fair value gap with ease and then potentially use it as resistance to then trade lower. But as I said, this weekly buy side imbalance, sell side inefficiency will be the downside objective for dollar index. So as I said, I'd be interested in seeing us trade to this fair value gap, trading lower. So my downside objectives this week for dollar index will be this swing low right here. Also the high of that weekly fair value gap. We'll call that the 103.00 big figure number. Below that, we trade down into this weekly volume imbalance here at 102.8, call it 102.85. And then animation through that takes us down into this bullish order block here at the 102.5 level. And keeping in mind the economic calendar, so it will more than likely be a wild week in terms of price delivery. So again, be sure to navigate it cautiously. So an invalidation, what I like to give you guys here is also an invalidation. So I always give you guys what I would like to see, and then what's the invalidation point of that? Or in other words, what would negate the bias I'm looking for? So if we trade up through this daily fair value gap, close above it, use it as support, we likely go higher. And then I would just reassess and get in line with what order flow is showing. However, I am still sticking to my guns that we are bearish dollar, given everything we're seeing here. So let's drop down into a hourly chart now. Here. Ashley Elkins, what's going on? What's up? Happy to have you. All right, so dropping down into a hourly chart now, just looking at previous week's price action, so we have some context going into this week. We're seeing bearish order flow, and remember these two lines here. Let me drag these over so we can see those. So the top one is the mean threshold of that weekly bearish order block, and then we have that daily bearish order block opening price. So we rejected the mean threshold here, ran stops inside of this premium, and then we displaced lower. And then for those of you guys that remember, we called this lower into these relative equal lows, given everything we were seeing here. Traded back up into that fair value gap, rejected strongly. And then we saw a retracement into last week, trading into a premium of the dealing range that we're trading within. From high to low, we traded to a premium, more specifically this bearish order block. We rejected lower. Retracement back up to this key level, expansion lower, trading back up into what key level is that daily bearish order block opening price. The algorithm's still referring to it, and then we displace lower. So an interesting thing about market structure here is if we are bearish, I wouldn't want to see this high violated. Why? Because it's now an intermediate term high, because it rebalances this inefficiency. Same thing here with this high. It rebalances this inefficient delivery on the downside. So I wouldn't want to see this violated. So we expect a lower high. What does this high do here? Rebalances this inefficiency here on the downside delivery. So this becomes a key high now. Same thing with this one. Rebalances this inefficiency. We would expect this to remain intact. Same thing with this high, and then we just do that all the way down. So that's a little insight into market structure and how you can use that to qualify or negate a bias and also cement the framework that you're looking to work within. So we see Wednesday, we trade up into that bearish order block on the daily expansion Thursday, and then we see a consolidation Friday, which is expected. No high impact news drivers on Friday and a pretty much range bound week. So no surprises here. So let's go into the forecast and expectations for the coming week. So within this dealing range here from high to low, measure it here. And then why this high and not this high or this high? Because this is where the energetic run began from. So I'm going to use this as our dealing range. So within a premium, what inefficiencies or PD arrays do we have? Well, first we have this, if it'll grab it, okay, this fair value gap on the hourly chart, right at that equilibrium. I'm going to take this off to clean it up, but just for you guys to visualize that. And then we also have a mitigation block in here. So last down close candle before the failure swing or lower high, we want to extend that through. So if we are to remain bearish and attack these relative equal lows down here and continue lower for dollar, I would want to see a reaction inside of these premium levels. So what I'll be looking for going into this coming week would be a retracement higher, our Judas swing as we'd expect, and then a expansion lower down into the discount objectives I highlighted on the higher time frames. What would invalidate this? If we start displacing higher through these levels, find support, then we likely trade up to these relative equal highs here or buy side liquidity. However, I am favoring a lower delivery as I highlighted. So with that, let's go into the bond market. And let's take a look at ZBM. Awesome. All right. Let's go to a weekly chart now. All right. So my interest in the bond market is these relative equal highs. And I know we've rolled over in terms of open interest into ZBU for the following contract month. However, it has a lot of missing data over here that I want to cover. So we will go to that one. But that is the one we are trading and looking at now, ZBU. ZBM, already the volume has left this contract into the following one. However, I said I do want to show some things with the candles on this contract. So we traded lower down into the discount as we expected. And then as I said, if we are to continue lower, we should reject this fair value gap in here on a daily and trade lower, and we have not seen that. We're seeing the bodies respect this fair value gap in discount. And then I'll show some confirmations in the lower time frame as to why I'm expecting higher prices on bonds, which would then send dollar lower, creating our risk on environment. So bodies respecting this key level here. Relative equal highs here would be our drawn liquidity. So nothing much more on a weekly chart. Let's drop down into our daily now and get into these key levels. Awesome. All right, so we've traded down lower into this bullish order block, which is these two consecutive down close candles ahead of the expansion. We trade down into that opening price beautifully, and we see immediate reaction from these discount levels. So this to me is qualifying institutional buying inside of these discount levels, as we're seeing an aggressive repricing and displacement higher through this swing high, considering this a shift in market structure. So also looking at this daily fair value gap, remember I highlighted the previous week, or no, the week before that one actually, that if we were to remain bearish on bonds, we'd have to trade up to this fair value gap and reject it. But we see that we trade above it, we're trading back down into it and using it as support. So this is a bullish indication. And then also look how the bodies are beautifully respecting the low end of that fair value gap. Beautiful delivery. So now keep in mind what this lowest line is as we go into our lower time frames. I do want to cover a couple things here. So this is our daily propulsion block. This is a propulsion block because it's an order block nested within another one. and look at the sensitivity at that opening price also. We're seeing beautiful respect for it. And then mean threshold of the 2-day propulsion block. So let me go ahead and cover that. So going to the 2-day chart now, we have that same opening price, but this is the mean threshold. So I'm going to measure this propulsion block and split it in half. So what we'll see here is it is 125.24, right? So now let's look up here. What's the low of this candle right here? Remember, right here. The low is 125.24, the same level that is the mean threshold. So a beautiful delivery right down to the 50% of that propulsion block. And with propulsion blocks, we don't want to see the mean threshold violated, and we see a beautiful reaction off that level. So on a 2-day chart, this is the order block. So on a daily, let me take this off, clean up that chart. Just wanted to show the precision in the delivery. So we are seeing bullish order flow as we're seeing support inside of discount levels. What would negate this bias, my bullish bias, is if we trade down through this propulsion block. However, we're seeing beautiful support for these levels. So I will expect continued bullish delivery into these relative equal highs. So let's go into the ZBU chart now, the one that we're currently looking at. You guys see I was missing this data. That's why I wanted to go into the previous month. But actually, let's go back to that because it has my annotations. All right, beautiful. Jumping down into a 4-hour chart now. We see we have this fair value gap. And what all I wanted to show is his key levels and how they're showing respect for them on these lower time frames. So look at that daily bullish order block. How we trade into it, immediate reaction higher. Fair value gap finding respect there. And now we'll go into the ZBU. Awesome. All right, so there's that same 4-hour order block. Extend that through. Beautiful expansion higher off that key level, creating a fair value gap. So now if we are to remain bullish, I would want to see this low remain intact, find support inside these discount levels, and rally higher. So on the upside for bond market, first target would be this high here at the 128, call it 128.17. Through that takes us up into the 129.16s. And then on a daily chart, I would be interested to see if we trade all the way up into this small inefficiency right here at the 129.25s. So I am seeing upside on bonds. So we are seeing that symmetrical market with dollar lower, bonds higher, creating that beautiful risk on scenario that we like to look for. So now let's transition into the index markets. Clean this up a bit. Man. Let's go up to a weekly chart. So overall on the weekly chart, we are seeing bullish order flow. Looking here, starting from this volume imbalance. Price finding support here. Fair value gap, trading down into it, support. Down close candles, our bullish order block. Trading down into it, support. So bullish order flow, not going to look to call it top. As I said, we were looking to see if we wanted to trade up into here and break down. However, I always say we never want to call a top or a bottom in the market. We'll just trade the order flow we have, and then once it shows its hand, we'll adjust to what it's showing. But one thing I did want to cover real quick, let me check my notes. Okay, yeah, one thing I did want to cover before going into the indexes is looking at dollar. So another reason, since I covered bonds, so another reason that confident in this being a shift in market structure is because I'm using intermarket analysis to qualify it. So because we're seeing all the things I highlighted in bonds pointing to higher prices and bullish order flow, seeing the dollar also shift market structure allows me to confirm that using intermarket analysis and allows me to trust it. So a lot of times I'm asked, okay, how do you trust a shift in market structure? How do you know it's not just going to take out these lows and continue higher? There's a lot more to it than just seeing a swing low taken out, which is why what I show you guys here is a complete intermarket analysis, which you should be doing, as this will set you apart from 99% of traders that either don't know about this or they may just be too lazy. So these are how you can qualify specific things by using other markets. So again, back to the S&P, seeing that bullish order flow, trading down into discount levels, finding support. So the reason I wasn't really too interested in price last week or trading the index markets is because of the fact that we traded to the premium levels that I was looking for. So we've been calling the market to this volume imbalance and this liquidity void here for those past few weeks, past couple months actually. And then we finally got that delivery. So whenever I see higher time frame objectives gets hit, I'm not impatient looking for the next thing. What's the next trade? Because these setups take time to form. So typically after we have higher time frame conditions or higher time frame objectives, met, it'll typically form some type of consolidation. So we see that beautifully here last week. So no surprise to us using the economic calendar and also the fact that we had our higher time frame objectives met, we see a consolidation week. Yes, this is tradable. Yes, there's setups in there. However, I'd just rather take time off and do other things. And then as you guys know, I traded Friday. I saw a setup that I liked, and I'll get into that a little more. And then that took care of my whole week, taking it off. So just some things I wanted to highlight. You know, whenever you're a trader and you're trying to force things continuously, okay, you know, we reach this objective, what's next now? You know, if you're an action hound or, you know, you need that next trade, you need that next setup, you're going to have a really hard time finding success and longevity in these markets. Because if you're impatient, impulsive, these markets will cannibalize you. So it's important to be patient, allow these setups to form, and remain disciplined. So marking these key levels out for our daily. Weekly liquidity void, reprice that beautifully. And note the closed right on that level. Nothing's random. And then, yeah, pretty much range bound week as we expected. So on the upside, my interest for the S&P is this buy side liquidity, this swing high on the weekly, and then expansion through that takes us into this volume imbalance on this weekly chart. So on the upside, that has my attention, of course, as long as these discount arrays support price. So as long as we stay supported inside of this weekly fair value gap and continue higher, then I will expect continuous premium arrays being delivered to. So dropping down into our daily chart now, the same weekly liquidity void, let me mark that out. So consolidation week, as I covered, Monday here, Friday closed here, market wasn't in a hurry to get anywhere. So we have this daily fair value gap, the low and the high marked out, and this dotted line is the consequent encroachment. One thing I wanted to note is look at how the bodies are beautifully respecting this key premium level, finding support, and also unable to trade down to consequent encroachment. So the fact that it's unwilling to deliver to this consequent encroachment is indicating that this market is extremely bullish. So I am going to continue expecting higher prices in the index markets. So one thing I did want to cover before moving forward is check my notes. Yeah. So as long as we remain above these discount arrays here, we remain bullish. I would rather not even see us trade back down into that daily fair value gap, as that would be extremely bullish. However, we can still trade back down into it and resume higher. If we do trade down through this daily fair value gap on a closing basis, then that would be a bit problematic for bullishness, and then I would have to reassess and get in line. But as always, I'll update you guys in the Telegram group with what's relevant, with what's important to what I am seeing. Awesome. So dropping down into the hourly chart now. So pretty much range bound week. Anemic runs through the lows, not indicating anything bearish. If we were bearish, this would displace with strength and aggression. However, we're not seeing that. We're seeing the lows being swept and rejected, swept, rejected. And then we see a key SMT here. I believe it was NASDAQ. Let me confirm. And I believe it was Dow. Okay, yeah, it was Dow that showed the SMT. So while ES and NASDAQ were making lower lows here, Dow was unwilling to do that, indicating it's under accumulation. And then also going up to the daily chart, I'll show you guys something else. I know we have quite a few people that trade the Dow. So since we are bullish, the Dow will give the best longs simply because it's much lower than S&P and NASDAQ. So that six sister concept, it has to catch up as it is much lower than the other two indexes. Looking at it here. Sorry. So while NASDAQ and S&P have already traded up to these highs, we see that Dow has been unable to. So it's showing much more animation on the upside delivery as a result of that. We have low, lower, low, bullish breaker, fair value gap, finding support here, trading higher into these relative equal highs. So, and you guys may also recognize this as my A+ setup. We're in a discount. We ran sell stops. We're higher time frame bullish. So this could be a valid long. So it's not limited to the 1 minute chart. I know many of you guys see me trading on a 1 minute chart, and it may not suit you. Personally, it suits me. I like making quick decisions. I'm able to do that, and it gives me a plethora of trade setups. I know every single day I'm able to go into the market and pull something out. I personally really like that. However, if you're only trading an hourly, 15 daily chart, you have to be very patient in between setups. There's nothing wrong with trading in that way. Just wanted to highlight here that these concepts are universal to all time frames. So for the Dow, it will have much stronger upside as it is that six sister and does have to catch up to the other indexes. So just throwing that in there. Back down to the hourly chart, and let's get into some expectations for this week. So looking at the dealing range that we're trading within from low to high, I would be interested to see, since we have relative equal lows in here, to see if the market wants to run down into there. I am expecting a big range week, given that we have that economic calendar the way it is. So I would be interested to see, do we trade down into here, into this discount valuation, below the sell side, accumulate that inside the fair value gap and trade higher? That's what I'm favoring seeing. However, I'll share another alternative. Let me go cover this. So this is that hourly fair value gap in discount. So I'd be interested to see. Okay, let me take off this dealing range. So just keep in mind this is discount on this hourly dealing range. So what I'd be interested to see going into this week is potentially some type of Judas swing lower into this hourly fair value gap below the sell side, and then see a rejection of that higher. That's what I'll be favoring going into this week. So now let me give you guys some price targets for S&P. So first target will be this high here at the 43.25, being previous week's high. Going up to a daily chart now. Second target after that, we'll call it the 4,390, which will be this buy side liquidity here. And then animation through that takes us into the 4,475. So those are my three price targets for this week and potentially even the next coming week, depending on the range. However, that's what I'll be looking for in S&P. So let me make sure I covered everything. All right. Awesome. All right, let me get to some questions now. I will cover the euro because usually that's the next question. Can you cover euro? Absolutely. Happy Sunday. Tommy, loving this. Glad you're loving it, brother. Appreciate you joining us. KK, can you look at GJ? Absolutely, will do. Lotus, live from the Panama Canal. Yes, I am. Out here enjoying the vacation. Beautiful tropical weather. So I'll go ahead and take a look at GJ. Christopher, take a look at gold. Alistair, awesome sauce. Awesome. Glad it's providing the value. Just be sure don't get lost in the sauce. Find you a model, find you something that works, and keep it simple. And one thing I did want to cover, is most of you guys watch these live streams anyway, the amount of detail that I'm breaking down the what's it called, the trading model series, how I'm doing a series for you guys just using one trading model. Every time I trade it, win or lost, I'll go ahead and create a video giving you guys an explanation of why I either got it right or wrong, as it's good for you guys to see. There is times that I get it wrong as well, and it's no skin off my back. It's a paper cut regroup, rearm, come back the next day, and look to get down to business. But I did want to cover with you guys real quick that the level of analysis that I'm doing is not required to find profitability. That's one thing that many new ICT traders mistake. They make the mistake of thinking they need every single weapon inside of our repertoire to make these things effective. Many times I don't even use half the PD arrays I know in my trades, because if it was, it'd be analysis paralysis and I would never make a decision. So it's important to just find a simple model. As ICT always says, you want to be able to fit your model on the back of a business card. You want it to be simple. You want it to be easily workable. And that's just something I wanted to mention. Just because you guys see me doing analysis to an extremely high degree with a lot of precision, keep in mind all those things aren't necessary to find profitability and a trading model. So KK, first question is, can I look at GJ? Absolutely. Let me go ahead and cover that. Take off these key levels. GJ. GBP. JJP. Forex.com. Awesome. All right, let's go up to a weekly chart. Okay, awesome. I remember I looked at this last week and I called it higher, so we got a nice expansion higher last week. Awesome. Good to see, good to see. All right, so still seeing bullish order flow on GJ, trading higher. Looking at these inefficiencies on the downside delivery, we have quite a few actually that I would favor being repriced to. So the first one on a weekly chart would be this one here, which we're about 50% of. So something to monitor on GJ is I would split this inefficiency here. Okay. So I would look at this and split it in half and get a consequent encroachment and then see how we react there. So as a first target, just eyeballing the consequent encroachment, just call it 176.0, big figure number. That'd be the first objective on the upside on a weekly chart for GJ. Through that takes us into the 177 big figure number, and the animation through that takes us into 178. So continuous bullish order flow on a weekly, nothing to short here in my opinion. So that's what I'm seeing on GJ on a weekly. Dropping down into a daily chart now. Beautiful bullish order flow, down close candles, support, 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 lending to higher prices. So as we discussed, beautiful, nice expansion last week. And I remember leaving off saying that we wanted this fair value gap here to support price if we were going to see this thing higher. And then we have seen that pan out beautifully and then got a nice expansion Wednesday, Thursday into Friday. So as I said, the upside objectives on a weekly still stand because we don't have any trading range outside of here. I would want to see this fair value gap and two down close candles, our bullish order block support price. What would negate my bullish stance on pound yen would be trading down through these discount levels. If we violate these levels, that would be problematic for bullishness. However, I'm not favoring that. I'm thinking if we do retrade down to these levels, it should support it and send us higher. Hope that helps, KK. And go and check this thing out on an hourly for you real quick. So looking at GJ here on an hourly, relative equal lows. We have relative equal lows here. Would be interested to see if we potentially would want to retrace down into these key levels, potentially a discount, find support and trade higher. That'd be something I'd be interested in seeing for GJ. But everything still stands on the higher time frame. Thank you, buddy. Awesome. Happy to help, KK. Glad that was helpful. Christopher, let me take a look at gold for you. Yeah, so pretty much range-bound week in gold as forecasted, given that the US dollar news was relatively light. Same thing as before. The thing that jumps out to all of us on the chart is these relative equal highs. So what I'd be interested to see is us running through that liquidity and also having a bearish dollar qualifies gold. So the great thing about what I do here and how it can help all of you is by using these intermarket analysis, you can use it to base it off whatever asset you're trading, whether it's Aussie dollar, New Zealand dollar, Swiss dollar, crypto, commodities. You can all benefit from a proper intermarket analysis. So the goal is for you guys to be able to do this all on your own and not even need to come to these videos. However, I know many of you guys enjoy this and it is helpful, and I enjoy it too. So going into gold, bringing in the intermarket analysis, dollar is bearish, so I would expect higher prices on gold as a result. So seeing that we traded down lower into this fair value gap on a weekly chart, seeing a nice expansion higher. One sec. All right, I was just looking at this volume imbalance in here. Yep, so we did retrade down to this fair value gap. So as I said, my attention is up here on a weekly chart. Looking at this move lower, we retraced, and now I'm looking for higher prices. So dropping down into a daily. Yeah, so sideways price action. Let me look at silver. Let's see. So a lot of times I use silver for SMT with gold. If I'm looking at gold, I'll look at either you know how it's usually gold dollar. You can also look at gold versus the euro, or silver for SMT analysis for our commodity traders. And then for oil, I get asked this a lot. What's another thing to use for SMT or for a correlated asset for oil? You can use, if you trade WTI or CL, which is the futures contract, you can use Brent crude, which is the European oil. So you can use European oil, contrast that to WTI, which is West Texas Intermediate crude, and you can use that for a intra-market analysis. So going into last week, Christopher, I remember we took a look at gold. If we were to remain bullish, as I highlighted, this volume imbalance here would be the last line in the sand and should support price. And we are seeing that here. We saw that we were unable to trade down to 50% of that inefficiency. So looking at the high here to the low, let's extend this line through 105.7. Extend that through here. Awesome. All right, so there we have the consequent encroachment, or 50% of this volume imbalance. And look at the beautiful respect there. So as I highlighted in the last week, if we were to remain bullish on gold, this would be a support. And then we saw that lend support beautifully. However, sideways consolidation. So going into this week, I would want to see price find support from these key levels and rally. I would want to see us displace through this fair value gap, not show any reluctance to get lethargic or weak. I would want to see us trade through it, close above it, find support to then deliver us into these relative equal highs here on the daily and weekly. So that's what I'll be looking for on gold. An invalidation level would be this fair value gap or not fair value gap, volume imbalance in here, excuse me, would have to support price. If this is negated, then these relative equal lows would have my interest, and then potentially trading down into this discount inefficiency. So hope that was helpful for you, Christopher. Thanks for the question. Olawale, fire as always. Glad it's helpful, brother. David, thank you, kind sir. Let's get this bread. Absolutely. New week, new money. Let's get it, my man. Sal, could you please, this week, can you look at PayPal stock? I'm looking at your A+ setup and just wondering if you agree this is a potentially valid setup on the 8-hour. Yeah, let me take a look at that, my man. PayPal. It's been a while since I looked at PayPal. Last I seen it, it was a knife. PYPL. PayPal. Let's go to a weekly chart. Yeah. Wow. Beautiful delivery. Lower from the 300s. Wow, over an 80% drop. Wow. All right, so we're in a deep discount for PayPal. And I mean a deep discount. Trading down below all these relative equal lows here, the sell side. So nothing much more here on a weekly other than deep discount. We traded below the sell side, so now we'll hone in or zoom in on the lower time frames and see what we got. Yeah, so PayPal, probably a lot better assets to trade outside of PayPal. However, we can still give analysis on it. So we've traded down below all these relative equal lows. Sell side liquidity has been purged. And then we've seen a stop run here, running the stops. And then we've seen a displacement higher. I view this as a shift in market structure here. And then we've traded back down into the range we've created. So if we are to remain bullish, okay, I see what you're saying now with the how you're seeing the A plus setup. I see the breaker in here as well. Looking at an 8-hour chart, low, lower, low, bullish breaker, higher. Yeah, this is valid. So I'm not going to go ahead and tell you to buy this. As you guys know, I don't give financial advice. I'm just sharing my opinion on the charts, and this is pure education. However, theoretically, if we were looking for higher prices, this would be a valid long, because if we trade down through this bullish breaker and this bearish order block, that would be a clear invalidation zone. So one of the important things to remember is that if you are, analysis and trading is two different things. I can have a beautiful analysis, know exactly where the market's going to go, and call it for you guys here on Sunday. However, that does not translate into me making money, because execution and analysis are two totally different things. Knowing where the market's going is something totally different than trading it, because with trading, you need to be able to position yourself and manage risk. So if your execution is sloppy, you can still know where the market's going and get stopped out prematurely and have a red week, even though I'm predicting exactly where the market's going. And there's weeks I can be wrong. I can predict it for you guys on Sunday, be totally wrong with where it goes, and make more money on a week than I was right in quotations. So that's one thing to keep in mind. Analysis and execution are completely two different things. It's important to have that in mind when trading. So this would be a valid setup. I'm not saying this is a trade, as I said. However, relative equal highs, you can manage risk within here. The indexes are bullish. So for stock traders, if you are looking to trade stocks, all boats typically rise in high tide. I know we have quite a few stock traders, quite a few people that trade options as well. If you are looking to trade specific tickers like Apple, Amazon, Microsoft, all the large caps, you always want to refer to the index markets, because all boats rise in high tide, meaning that if the broader market is rallying, it will typically be much easier to trust buy models inside of individual stocks. Whereas let's say the indexes are rallying and stocks, and you're trying to short a stock, that's going to make it much more difficult. So you just want to look at a stock or a ticker that's also rallying along with the broader index markets. So I see what you're seeing here, Sal, in terms of the A plus with the breaker. So yeah, that's valid. If we are to remain bullish, I would definitely want to see reactions from here. If we violate that, then we could see lower prices. So as I said, this is nothing to bet the farm on. This is just what I'm expecting. As I said, this is my opinion. So we should find support inside these discount levels and rally higher if we are to. My first objective would be this fair value gap here at 66.50. Animation through that takes us into this liquidity void here at 73 to 70. So this would be a second objective. And then through that takes us into these relative equal highs into the low 80s. So that's what I'll be looking for on PayPal. Hope that helps, Sal. Denisha, hey, sorry I'm late. Could you check oil when you get a chance? Thanks, Dylan. Yeah, thanks for having me. Or, not thanks for having me. Thanks for coming. Glad to have you. Absolutely. I'll take a look at crude oil real quick. Let's see. I was actually taking a look at this morning. So don't have much interest in crude oil specifically, just given the range bound consolidation that we're in. So one thing that's interesting is that we do have these relative equal lows here. That would be an interesting draw on liquidity going short if we are to continue bearish. So not much more here on a monthly. Let's zoom into the weekly chart. Make that full screen. So as I said, we have these relative equal lows here. We gapped up, took out this buy side, and immediately rejected it lower. So we're kind of in no man's land here, where inside of this consolidation. And as many of you guys know, I like trading crude oil. It's something I trade longer term. However, this doesn't really have my attention given that we're in this consolidation. So just as we did, for example, with the bond market when we were looking at it here, when we were in this consolidation, we'll just wait for it to break out. We're not trying to guess, are we going to break out higher or lower in gambling like retail is? We'll just let the market show its hand. One thing that I really like about smart money, the concepts, the ICT concepts that we use to trade, is that we're never guessing why we're doing what we're doing. We always know exactly what we're doing, and if we're not sure, there's nothing to do. We just demand more information and wait for more intel. So same thing here that we did on bonds as it was in a consolidation. We're not trying to guess the breakout. We're just going to wait for it to displace, and then we have something to work with. So same thing in crude oil. I'm not going to try to guess if we're going to go higher or lower. I'm just going to wait for a displacement, and then we'll have something to go off of. Gun to my head on crude oil, I am expecting lower prices. We've traded back up into this bearish order block here once more, reclaimed bearish order block, and now we are trading lower off of that. We gapped up higher here, big time off of, hold on. Yeah, so big gap higher, and then we completely filled that and traded below it. And then we're now starting to use this as resistance. So given that we're seeing overall bearish order flow top down, we now have relative equal lows here, and zooming way out, we have relative equal lows here. So there's a lot of sell side liquidity residing below the low 60s, 61, 62, and that has my attention for now. So I'll always share with you guys my opinion. I'm not afraid to get it wrong. It has no bearing on my profitability, so don't get those two things twisted as I covered. So lower prices on crude oil given everything I'm seeing. Let's drop down into an hourly chart now. See what else we've got. So trade up higher through the buy side, strong rejection. So yeah, overall bearish order flow on crude oil. So as I said, my higher time frame objectives are what I will be looking for. More specifically, just waiting for a displacement before I will look to risk capital in this market. Santa Eunice, love you, bro. Appreciate the support, man. Thanks for coming through. Remus, EU and GU. Denisha, thanks. I'll be keeping an eye on it. Awesome. Glad it was helpful. So I'm going to go and take a look at Euro. Euro. Awesome. All right. So same thing as dollar. If I am bearish dollar, I am bullish Euro. So let's look at a couple things here. Looking at this fair value gap, this discount level, we called this thing lower. Down to these discount objectives, more specifically a weekly bearish order block as well. Extending this through. Double thickness, 3, awesome. So keep in mind this thick black line is that weekly order block. So that was our downside objective for the Euro fair value gap inside of a weekly order block. Beautiful delivery, and now we're seeing a consolidation. So given that we were unable to close below it and use this as resistance, I am favoring higher Euro, because if we were to be bearish, we should close below it, use it as resistance, and then trade lower. However, we see the bodies, which I say this many times, the wicks do the damage, body tells the true narrative. So given that the bodies are staying within this fair value gap, supported at this weekly order block here, beautiful respect, here and here, I'm favoring bullish order flow. Also, given that we have a shift in market structure. So why am I trusting this as a shift in market structure? Because dollar is bearish. So because I'm bearish dollar, I'm bullish on bonds. All these things come together to then allow me to trust buy models in the Forex market. So for EU, I would want to see this down close candle, this now balanced price range, support price. We should not trade down through here if we are to continue higher. So I would like to see support inside of the small fair value gap higher. So my first target for Euro will be previous week's high here at the, call it 1.078 level. Through that, I like this high here at 1.083. And then through that takes us into this inefficiency here at 1.085. And then through that, I like the 1.09 big figure above this buy side liquidity. For GU or pound dollar, one thing I did want to mention Man, Euro GBP is cratering. So as I highlighted to you guys, if we were looking for shorts, the best shorts would occur inside of pound or euro. And I covered this when we were all the way up here. So no hindsight. I'm just going to teach you guys the things I'm using to call the market. One thing I want to make a distinction is I'm not here to reteach all of ICT's concepts. He has his YouTube channel and a plethora of teachings there. I'm just sharing with you guys again how I use these concepts in my analysis. So the reason I was sharing with you guys that euro is much more bearish than pound is one, because of what I shared here about these relative equal lows. It has a reason to want to drop. Another thing is the SMT. So let's look at pound here. So this will be a gem for the Forex traders. So looking at pound, we have that SMT here. So the fact that euro failed to make the higher high indicated it's under accumulation of shorts. And then we saw that beautifully. Further confirmation is now looking at euro pound. So the fact that euro is first and this asset is weak, the euro versus the dollar will be much weaker than pound dollar. So also using the cross pairs or the exotics, we can use that to also determine euro pound strength. So if we're looking to short, what's going to be the best short opportunity? Euro or pound? Obviously pound. And then on the flip side of that, if we're looking to go long or buy Forex, what are we going to look to buy? Pound or euro? And pound was clearly the better longs, as we're seeing much more extrapolation on the upside relative to the euro, which is showing anemic runs higher. So there's several ways to use the analysis that I'm giving to you guys, but that was just a little further insight on how I forecasted these things, and they're still manifesting in the charts. So for longs, same thing. We would favor pound because it's showing a willingness to want to rally higher over the euro. So same thing for euro and pound, higher prices. Down close candles should support price, more specifically this fair value gap within that. I like how we're closing inside of this fair value gap, not showing any rejection. So I would want to see us close above it, find support, and trade higher. Looking at a weekly chart now, we have all this inefficient delivery here on the downside. So I would be interested to see us trade back up through that into this inefficiency above here. That's the higher time frame, drawn liquidity on a weekly. And we traded beautifully down into the breaker. Low, lower low, last up close candle within this price range, extending that through. Beautiful support here. And then one further thing is how we were unable to even trade through the mean threshold. So where my cursor is now, that's the 50% or mean threshold of that bearish or bullish breaker. So the fact that we were unable to even trade down to mean threshold indicates this market is bullish, and I will expect continuous expansion higher on pound. So Ramus, little deep dive there on EU, GU. Hope that was helpful. Gape, what's the correlation between bonds and dollar? All right, let me go ahead and go into that, and I'll go ahead and finish off with that. So let's go ahead and take a look at bonds first. Do a quick teaching here on intermarket analysis and why it's effective. So this will be a little more fundamentals behind why we do what we do. So this is the bonds themselves. These are the treasuries, or not treasury bonds, the T-bonds that the interest rates derive value from. So one of the most important things to keep in mind is that interest rates make this entire world go round. Interest rates are the key to this financial market over all of the currencies in the world. So now let me explain to you why that is the way it is. So whenever we see, for example, here, the T-bonds themselves falling, that's going to make interest rates rally, right? So let's go ahead and contrast this price action. The 30-year yield is fine. So as the T-bonds are dropping themselves, interest rates are going to rally, right? So if interest rates are rallying, that means that the percent interest you earn by holding the US dollar is increasing. So would you rather hold the US dollar earning 3% interest or hold the US dollar earning 4% interest? Obviously holding 4% interest. So keeping in mind, all these trillions of dollars that are flowing through these markets are doing one thing and one thing only: seeking yield. How can it make money, and how can it work for the clients that are investing in these markets? So given that we have interest rates higher, what's that going to do? Now let's ring in the dollar. That's going to make dollar rally. I can know dollar's rallying here without even looking at the chart. And we see move higher on dollar. Why? Because the interest rates are rallying. So it's going to be more attractive to hold the dollar relative to other currencies. So we're going to see dollar rally. And what's that going to do? Put pressure on euro, put pressure on pound, because money is, or capital is leaving foreign currency and entering the dollar. Why? Because bonds are falling and interest rates are rallying, making the dollar a much more attractive investment. So that's the fundamentals behind why risk on, risk off is effective. So if money is pouring into the dollar, what's it doing? It's leaving index markets. So we're going to look for risk on, or risk off, apologies, where we're going to see a higher dollar and capital leaving indexes, capital leaving the Forex markets and seeking that dollar index. So there's a little deep dive on what makes this intermarket analysis effective and a little bit of fundamentals behind that. So awesome. So I think that's all the questions. Oh, actually, I had one more that I was supposed to get to. Let me check the Telegram so I can get to that one specifically. Apologies. One more. All right. Tenzin. Guys, one question. Does London session normally form the high or low of the day? Or does London normally make the Judah swing for the day? And then we see a reversal in New York. All right, let me go ahead and cover that. Let's look at the old euro. So this applies to all markets. I'm just specifically looking at the euro right now. Let's go ahead and get the day dividers on here so we can see more clearly. So how to know when to expect a reversal profile in New York or a continuation of a London high or low of the day, which is what I'll be covering. Awesome. All right, so this is enough. Perfect. So let's specifically look at this day here, and then we'll walk through the week. So some things to keep in mind. If London session takes out a liquidity pool and expands, that's typically going to be the higher low of the day. However, if London session consolidates, we'll expect that reversal and higher low of the day to be made in the New York session. So let's look at some examples. So here we predominantly have a consolidation during, let's look at this on a 15-minute chart. It'll be much cleaner. All right, awesome, right here. So remember the rules. If London is a consolidation, what was London here? Sideways price action. We're going to expect the reversal to form in New York. So we take that sell side in New York and create that reversal, that typical higher low of the day that we'll expect in London. But because the London European session was a consolidation, we're going to expect that low of the day reversal profile to be made in New York. So now let's look at another example. So we typically expect London session to form our turtle soup setups, the false breakout, or the Judah swing manipulation. And typically it does do that. However, if it consolidates, we'll expect New York to do that. So now let's look at another example here. So we have the opening at midnight. So if we are bearish, which we were, we would want to see what? A manipulation above this opening price here at midnight. We have relative equal highs. We have a fair value gap in here that we traded up into. So what is London session doing? It's expanding, trading above the buy side, creating that false breakout. So London is now making that higher low of the day. Why? Because it's doing the expansion. It's doing the manipulation. So then we would just use New York as a continuation. So we see here, New York session here, retraces where? Back into this daily fair value gap for reaccumulation of shorts for the continuation move lower that began in London. But this is how you know when to expect a reversal profile in New York session or a reversal profile in London. And it all depends on what the London European session did. That then gives us that insight into New York, which is why I personally really like trading the New York session, because I have all this insight of what the European London session did behind us. So I can then have that info or intel going into the New York kill zone. hopefully that covered your question, Tinzin, on how to forecast a reversal or continuation in the New York session and how to know when to expect the higher low of the day to form in London. So with that said, pretty productive session. Hope it was of value to you all. As always, appreciate the support, hitting that like button, sharing a comment with what you're seeing, what you guys would like to see more, and any feedback is greatly appreciated, of course, as long as it is respectful. So with that, I appreciate all your time. Thank you all for joining us. And as always, I will keep you guys updated in the Telegram channel and look forward to a great week ahead. Everyone take care and have a good one. Good luck and good trading.